What's good, everybody? Welcome to the closing beat. Happy Thursday. Hope you're having a good day so far. It's almost over, right? And this is the closing beat. We go over stock market update for the day. We cover the good, the bad, and the ugly. I will say, if you're one of our customers tonight, look here at the bottom. We've got our class we're going to do for you, the Wine and Wealth class. We're going to get into some topics tonight. So we'll cover how really the effects of a market decline sort of benefit you. We'll go over some of the details on that. And then we'll take your questions if you're one of our customers. We will have, we'll talk about the stock market. We'll talk about all kinds of good stuff, positions you have if you're interested. We call it Wine and Wealth if you've never heard of it before. It's just where we get together for a little bit and kind of update you on things. And I try to teach something new that maybe you've never learned before or something that can help you. Tonight's going to be really, really good. I'm looking forward to it. So grab a glass of wine. Come join us tonight. We call it Wine and Wealth. Well, we're here to talk about the stock markets today. They were lower. So if you watch on a daily basis, the day-to-day stuff doesn't scare you because we walk you through it. And I always say I'm not one of those guys that I told you so. I like to tell you ahead of time. And so we're kind of prepping you for how this market was going to find a bottom. And today's a great example of that. So we're going to go through it. The Dow was lower, as you can see there, by about 1.25%, S&P 1.4%, and the Nasdaq, once again, the hardest hit there, which was down about 2%. Kai says adjust the volume. Tell me guys, let me know. Is the volume not loud enough? Let me know what the deal is there. Give me some updates for those of you that are watching live. I'll see what I can do. Okay, here's the deal. Today, focus is China. China's going to creep its way back into the news. I can promise you, it's slowly going to be more and more. They're getting clobbered over there. I don't know if you follow the Chinese markets. I love following the Chinese markets overnight. I actually follow their actual markets. And there's a lot of interesting things going on there. A lot of people are trying to pick the bottom on this, and I just don't know that it's quite time yet. So we'll cover a few things there as we go. But I want to show you on the screen here. You can see the screen. There you go. Perfect. So you can see the screen here. We got the Dow trying to form some kind of support here. Still very much in an uptrend, however weak overall. The Nasdaq 100, you could see here also kind of indicated by the line. It is still very much in an uptrend, however weak overall. So back and forth here, trying to recover from what's happened over the last couple weeks. The S&P is doing the exact same thing. And while we're here on the S&P 500, I want to focus in on a couple things here. We've talked at length about the February decline mostly. We have talked about this one here in March and April. But the February one is really interesting because that was our last really aggressive decline where people were very fearful for the moment. And so we saw the really sharp decline there down. And I want you to notice, if I zoom in just on this area, did the S&P, the Nasdaq, the Russell, did it recover right away? Did it ever just kind of sneak back up there and just take off to new highs? No, right? There was a lot of back and forth, some very big up days and some very big down days. And we always use the analogies, if a professional boxer punches you in the face, you are not going to get up and walk away. You are going to wobble around a little bit. You're going to be scared, like, where am I? What's going on? Eventually, you'll get your bearings, realize you need help, and go seek that help. The market does the same thing. When it gets punched really hard like that, it wiggles around. People are scared. People are excited. There's always going to be people that believe it's an opportunity, and there's always going to be people that believe the world is ending. That's what makes a beautiful, beautiful market. Now, I will maintain the same thing that we talked about before, where during these times, what happens? You got people like Warren Buffett. They disappear. Warren Buffett could be dead for all we know. We have no idea where'd he go. I mean, I hope nothing bad's happened to him, but he is gone. Why? Because he's shopping. And so back in February, when the markets fell, he went quiet. All the big guys went quiet. Come to find out, they all have filings that they have to report to tell us what they bought later. And he was in there buying shares. So the same thing you expect to keep happening here with the stock market where it's at now. If I zoom into what's happening here, the stock market got punched in the face. It's wiggling around going, whoa, is the world ending or are we going to be fine? And so because of that, you get this really big back and forth. Sadly, we've given back almost all the gains that we've saw from Monday. So that's something you have to deal with there. But in the short term, you've got the market just trying to find some footing. You've got earnings messing with everything there. In the meantime, it's a really interesting time for the markets to get punched like this. You've got China. It will be a headline. The media day to day, yesterday and today, had almost nothing to focus on. You do not want mainstream financial media to get bored. If they get bored, they drum up a topic and they will stay on that topic. Not a bad thing. I mean, they need eyeballs, right? They need people to go watch, and so they're going to drum up whatever topic they can. They're starting to hint at China. They're putting it out there little by little. They're gathering up the guests little by little. More people are coming to join their shows to talk about China, the experts and whatnot. And so you're going to hear more about that. So we look back here in time. I wanted to make a note to kind of show you that stock markets don't just recover. Also, that move last week, we talked about how that was program trading. I went through and showed you exactly how that works. I matched it up market for market or minute by minute to show you where the money was going and how the computers were selling that. Well, today, Goldman Sachs' new CEO was everywhere. And he admitted, his actual words were, that was program trading. Coming from the guy whose company runs some of the biggest and baddest programs out there, he admitted it. He said it. So whereas before, I can only show you on the screen and say, this is what I think because I've seen this before, he admitted it. So we're on the same page now. I'm happy that he said that. If you want to look up the interview, I believe it was on CNBC that he did the interview there. Okay, sector-wise, stock market today. Semiconductors, woo, that's weak. Look at the semiconductors under the 200-day moving average. Yesterday, we put the trend line there to kind of show you, if they did rally, it was still going to be tough sledding on the way up. The 200-day moving average, the trend line there bugging us. For now, semiconductors are lower. They all have earnings coming up, so expect this back and forth to continue on the semiconductors. I'll look at the banks here. The banks gave back their gains here from yesterday, continuing to pull back. They have a more aggressive sell-off. These big banks have really struggled to participate lately, and now you're hearing the murmurs, little upgrades, little comments here and there from analysts that are like, hey, Goldman Sachs, that's a discount, right? They're talking about these names here. Morgan Stanley, people are going, hey, that's a discount. And so you're starting to maybe see a little bit of a change there for people that are interested in playing the banks. I won't make any comments just yet, but that's what, I just want to report what I'm hearing. You know what I mean? Not my opinion. Okay, gold looks like it's going to have its third straight week positive here. It's not that impressive. It's going on 3 weeks. We have alerts set for that kind of stuff just to let us know. Gold continues to be a sort of less expensive way to hedge, to play for protection, to go for the safe haven, things like that. So you notice gold doing that. And I'll bring up one more. We don't have to go through them all, I guess. Home builders down another 2% today. They were downgraded again. I believe it was Bank of America. They downgraded the sector, and the sector pushed to new lows. Do you kind of like that? Like, I don't know. I was looking at this earlier today, and I was like, I'm kind of attracted to that downturn. Like, now that it's really starting to sell off, home builders, I get it. They're struggling. Higher costs, higher labor costs, higher material costs, higher interest rates, slow down in the number of people that are buying, slow down in the number of homes that are being built. New applications for mortgages are all slowing down. I get it, but doesn't that kind of like turn you on a little bit? Like, I kind of look at the home builders and I'm like, be interested to see if any of the big investors dip their toe in the water there. We won't know for some time, but we'll keep you posted on that. Travelers Insurance, it actually finished down about 1% on the day. They reported earnings better than expected, revenue better than expected on both their personal and their business insurance side of things, so thought that was worth pointing out. Philip Morris bumped its head right up against the 200-day moving average. Don't let anybody tell you that 200-day moving average doesn't mean anything. Everyone looks at it. Every technical trader, everybody on TV, every person on YouTube, whoever trades is looking at the 200-day moving average. Philip Morris did bump its head up above that. Earnings came in better than expected. Revenue is a lot smaller on the little piece of paper than I thought it was. Revenue was better. Analysts were focused on their higher pricing. These guys have all raised their prices little by little. Philip Morris is like Marlboro, by the way, the cigarettes. That's probably the most popular name there. They left their full year outlook unchanged though. So the stock was higher to start the day. Company was like, we're not going to say that the rest of the year is going to be great. That's usually a sign of weakness ahead when companies do that. If everything's good and you're beating top bottom lines, you got higher revenues and everything, why wouldn't you say things look good going forward? So that was the one like black eye on their earnings report there. All right, Constellation Brands didn't really do a whole lot today. It was down a little bit. They're getting a new CEO. The new CEO wants to and is very committed to expanding on that cannabis area. Constellation Brands is a beer and wine company. A lot of the big names you've heard of before. They made a huge investment in canopy growth. So canopy growth was one of their biggest investments. That's part of the reason this stock has been up so much. Constellation Brands now owns 38% of the company. And so they have made indications that they're willing to go heavier. They've made indications that they're willing to expand outside of that. These guys, Constellation Brands is taking the medical or the drinking and marijuana sort of thing as a combination. They're taking that very seriously. The new CEO takes over on March 1st. However, he's already out there in the headlines trying to get some attention. Apple, they were lower. China sales in their iStore a little bit slower. They also announced that this is October. They announced October 30th a new event. They're probably going to release new iPads and new Mac computers, if that's sort of your thing there. ATVI lower, 8% on the day today. ATVI Call of Duty sales. Call of Duty sales came out. I thought they were pretty good. 8 million units, 500 million in revenue or in sales for that. But there's one analyst from Jefferies that was like, you know, we thought you were going to do 10 million. And so because you only did 8, that's not good for us. We're pissed. And so basically the stock was lower by 8% just because of that. More news going into the holidays on that one. Blackstone Group got a special request here. This one's down 2%. This one's sort of near and dear to everything I'm sort of researching at the moment. Basically, earnings came out today. Assets under management is always a big focus there. 18% higher on that one. So good news on earnings, good news everywhere. Why is the stock lower? If you have a chance, there is a big push by the super wealthy and these companies like this. What they're doing is making obscenely large bets on infrastructure. See, when Trump became the president, all these guys went to the White House. And you're like, what are they doing at the White House? Like, you talk bad about the president, then you go to the White House and you sit at the table and you're all like, yep, we're going to get stuff done. What are you doing? And so all of these big fund companies like this went to Trump and they basically said, yo, are you going to make a big deal out of infrastructure? Are you going to try to get some money to rebuild and all this? We heard the campaign. You made all the promises and you complained about LaGuardia Airport and all that. Are you really going to go ask Congress for all this money? And Trump was like, I got you. Don't worry about it, man. I'm going to do this for you. And so these guys raced out. Blackstone, one of them. Blackstone goes, you know what? We're going to start a new fund for infrastructure. We want $40 billion to be raised. And so what they did is they went everywhere and they said, look, if you've got a lot of money, invest in the infrastructure fund. All these other companies are doing the same thing. Well, one of the people they reached out to was Saudi Arabia because they have God tons of money. And so Saudi Arabia started with $5 billion. They've committed up to $20 billion, which is half of what they're trying to raise. Why? Because when Trump eventually does make a big deal out of infrastructure, and he will, they're going to ask for trillions of dollars to rebuild roads, airports, anything the government can get their hands on. And they're going to spend that money where? Right? With the companies that are going to get things done. If you're invested in infrastructure with like Blackstone, that could be a sweet thing if you're one of those wealthy people. We'll have to do a video on that one day where you ever wonder how, like when they build a bridge somewhere and then there's a toll at the beginning of that bridge, where's that money go? Because they built the bridge, where does the money go and how does it work? Blackstone, right? So that's how these sort of things work. Blackstone is going to absolutely kill it if we can get the infrastructure bill at least talked about and then passed and everything. So anyways, the problem today, 2% down on the day, because look, Saudi Arabia might be in some trouble here. A guy walks into the Saudi Arabian consulate and dies? Like, what? Clearly something went wrong there. Nobody's like, well, if he didn't get murdered, then how did he die? And that question's not coming up. Everybody's like, he murdered him. Saudi Arabia killed the guy. So there's this tension brewing there. U.S. is trying to stay out of it because we got a lot of deals going with our aircrafts and things going on with Saudi Arabia. We don't want to hurt our companies. And so without getting all into the whole nonsense of all of it, little tension there. And so because Saudi Arabia has $20 billion invested in this fund and the CEO of Blackstone said, you know what? We were supposed to have a conference over there. I'm out. He backed out already. He doesn't have the facts unless he's called the president and found out something. So because he did that, people were like, wait a minute, does that mean Saudi Arabia is going to back out of the deal? Right? Because that's a big deal for Blackstone. It could be huge, a huge profit center. And if they don't get the funding, they can't participate. So tensions, basically. The short answer is tensions. But I love reading about that stuff. So if you ever want to we should maybe do a class where I just talk about randomness. But for now, we'll keep it straight. Netflix down by 5% today. Look, the big tech stock names got hit today. I think the real reason is Orange is the New Black, the last season. This upcoming season will be the last season. That's probably the reason, right? You guys watch that show? So that show's coming to an end. That's, of course, obviously a poor joke. Facebook, they said, we're putting together a war room. I would love to see this thing. They're putting together a war room to combat all of the fake posts and fake news that come out during the midterm elections. Doesn't matter where you stand on whether people should be allowed to post whatever they want or whether it should be moderated, as you would say. Doesn't matter where you stand. The point is, how much money are they spending on that? Is that going to affect what they're doing? Come on, that's a lot of money to spend to have people just sitting around looking for fake news and stuff. So investors are like, yeah, I don't know. We need to hear more information before they make a decision. So Facebook down a little bit today. Starbucks continues to fail over the world here. Look, they've mastered the whole U.S. Barista sort of come hang out and have coffee for some reason 24 hours a day in our store. They've got that figured out here in the States. They tried to go to Germany in 2016, I think it was, 15, 16, somewhere in there. It didn't work, right? They tried, it didn't work, so they had to sell off those stores. They have stores in Europe that they're selling off, and they're going to be licensing to like Denmark and Mexico and stuff like that. So the stock was a little bit lower on that news. It's not a lot of stores. If you're an investor in Starbucks, absolutely no reason to go, oh my God, they can't figure out what to do. It's like a handful of stores. It's not really going to affect a whole lot, but it was in the news and it did affect the stock. American Express came out with earnings here. Not bad. They beat on all earnings. And actually, earlier today, they announced a partnership with PayPal. And so if you happen to look at PayPal, what a coincidence. They reported earnings today as well. They beat on earnings and revenue. This is going to be a volatile one. The press conference or the earnings conference call just started here at 5 o'clock. So I don't have any new news on that one, but they're going to focus on the Venmo product. So as far as the initial results from PayPal, Venmo, the product that they have, Venmo did 17 billion in total transactional volume. That was higher than expected. So if they say some good things on the conference call about that they're able to monetize that and start to maybe find a way to make a profit, that could be a good thing. So I'll just leave you with that. We'll talk about that more tomorrow because that's happening right now, and since I'm here, I can't pay attention. All right, in the Dow, yeah, Caterpillar, transports, poor transports keep getting hurt there. Transports down another 2.5% on the day. That's tough. They're getting beaten up. I kind of would expect that to continue. There's no reason to change that opinion. Yeah, Home Depot, Lowe's, they were up, downgraded the other day, which has pulled them down. So if you like discounts on that sort of thing, not too bad. What would happen if people ignored analysts? They're fading away. I mean, analysts are slowly dropping down. It's look, I'll tell you what. If you have the experience, the big guys, the Goldman Sachs, JP Morgans of the world, they are paying obscene amounts of money. I'm talking millions, not like it's a $100,000 a year job. Millions. If you are a biotech analyst, they can't find them. If you want your kid to be successful, teach them finance, teach them biotech, because they're looking for them. They can't find them. They're willing to pay top dollar. I believe 1.4 million was the last offer from Goldman Sachs to actually try to hire a biotech analyst worth their weight. It's a tough sector, I'll tell you that. But if you need 1.4 million, maybe brush up, search on YouTube, biotech analyst, learn a little bit about the sector and apply for the job. I would. I mean, well, sure. I hate biotech stocks, by the way, but 1.4 million a year plus bonuses. Okay, that's basically all I have. Thanks, David. I appreciate the comments there. Wine and wealth tonight. Kind of a beginning sort of discussion. This the secret to the markets declining there. We're going to cover it in detail. It's going to be some things that maybe some of you already know, so we'll use it as motivation. But the the topic's going to be in depth. So I'll try not to take too long. If you're a customer of ours, you already have the link in your inbox there. If I've helped you in some way, hit the subscribe button. We are pushing hard for subscribers. It matters not to me about whatever, I don't care about like how it looks on YouTube. I want the data. I've said that. I'm going to say it every day. You can leave if you want if I bore you to death. But I want the data. I'm going to be doing conferences and discussions with companies that I hope to partner with in the future somehow. So I'm going to be talking in front of them next year. And so I want to have the data. I want to show them why they can improve. I'm not saying they're doing it wrong. I want to show them how they can improve based on everything we're doing here, and I want the data to prove it. So if I've helped you in some way, hit the subscribe button. That will help me, and I'll never ask you for anything. And then if you really are interested and you want to know when we go live, hit the bell. That'll tell you when we go live. Everyone who has done that, I really appreciate it. If you're one of our customers and you are a little nervous about the stock market, let's talk. But otherwise, let me know you want a towel to wipe the sweat off there and read that stat. The markets recover 100% of all declines 100% of the time. If everybody believed that, the markets would never go lower, would they? But unfortunately, that's a hard thing to sell. Anyways, hope the volume's better. I fixed it there about halfway through, at least bumped it up a little bit. I appreciate all of you guys watching. We'll see you later. And if not, we'll see you tomorrow. On the Doe Show, I'm going to be sharing some interesting stories, some sort of weird stories too, about trading. Active traders that I've run into, mistakes that I've made, good, bad, ugly. We're going to cover it all on the Doe Show tomorrow to wrap up our week of active trading and helping you with that. And then we're going to get back to retirement. Next week's going to be all about your number. You guys got to know your number. I'm going to work you through it, and we'll talk to you then. Enjoy.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.